Hey guys, my name is Jeff. Welcome to the channel. Today I'm going to show you a piece of paper unlike anything you've ever seen. I'm going to tell you 3 stories that relate to investing, and I believe that each one of them is going to be designed to help you get a much better understanding of how to invest. And by the way, today's video is brought to you by the colors blue, red, and green. They didn't actually sponsor me, but I like those colors a lot, and you will find that each color represents a different section of this video. So I'm making this video because there is so much hype on the internet and people saying, you know, which stocks you need to buy now to get rich quick, or, you know, where the market's going and what you should do now to protect yourself from something that may or may not happen. And to me, I think there is far less information that I feel would be truly useful to you who's watching this video and trying to understand and learn and figure out, you know, what to do. You know, it really wasn't that long ago that I had very little money and no experience, honestly, no experience with investing. And I was just trying to figure out, like, I don't want to just keep my money saving in the bank. And so I want to put it into an investment. But the whole idea of it terrified me because I really didn't feel like I knew what I was doing. And if I screwed up, I didn't want to lose the money. So I want you to understand that I know what it feels like to be in the beginning stages of investing, especially in times like now when the market's already, you know, come down quite a bit in the last 8 or 9 months. What I want to show you is the path that I've taken, the choices that I've made, and how it's worked out. And that doesn't mean that it's going to work for you or that it works for everybody. Let me show you a little bit about what I did and how I started, and I think this would be really useful to you. Now, when I started investing, you know, we had to do a lot of reading of paper stuff, and I actually saved this magazine. It's Forbes magazine, and this was a 39th annual mutual fund ratings, okay? And this came out before you could buy ETFs. ETFs were not a thing, but mutual funds were. And you guys are all familiar with index funds. Those were one type of mutual fund, but there were a whole bunch of other mutual funds. And back when I started investing, the idea of hiring a mutual fund manager, usually a really smart guy or a woman or a team of managers, to invest your money. Back then, index funds hadn't really caught on. People like to invest money with portfolio managers. And so I went through this Forbes, which is an annual mutual fund magazine, and I read through all of this. I took little notes on the different mutual funds. And, you know, this was me in my 20s just trying to figure out how to invest. I read all through this magazine. I spent, like, you know, a few weeks trying to figure out. This was before the internet, so we had to read this stuff on paper. But after I did all my research and stuff, I found one that you could get into, and the initial investment amount was only $1,000, which is a lot of money. I shouldn't say only, but some of them required like $2,500 or $3,000. And that to me just was like a crazy large amount of money to risk on that first investment. And so I found one that had a really good reputation for growing money in up markets, but more important than that, this particular fund had historically done well when the markets crashed. And so since I was afraid of losing money in bear markets, I invested in this fund. This is my first investment, okay? I'm gonna show you a piece of paper relating to my first investment, and it's in a mutual fund, okay? It was called a mutual qualified fund, all right? I made a $1,000 initial investment, and then after that, I decided every month to invest $100, okay? Now, just to give you an idea, I was in my 20s, like $100 was a lot of money. And after I'd made that first investment, I was like, okay, let's just see if I can do $100 a month. And to break that down for you, that's 25 bucks a week. So after I did all of my reading and research in that magazine, I settled upon one mutual fund to invest in. And you know, $1,000 was a lot of money. It still is a lot of money, but then that was a lot of money to invest, especially because I'd never invested before. And I really knew that whenever you invest in the stock market, you could lose everything. I mean, it's always possible that you could just lose your money. So the idea of taking this money that, you know, I didn't really want to lose, but I thought, you know what, that's what investing's about. Sometimes you have to take that risk of investment in order to see if you can grow it. So I wrote out a check for $1,000 and I filled out a mutual fund account application and I sent it into the company, and I got this back in the mail. And this is what I was going to show you. Hold it right here so you can see it. What this is the date of the trade, direct purchase, $1,000. I got my $1,000 worth of mutual fund. And what I decided to do was every month just to add $100 to it. So I did that one month, I did that the next month, and I did it the third month. And you know what? It wasn't that hard to do. It was kind of like, you ever go to the gym? You ever see those little weights, they're color coded, you know, like yellow or orange or green, and they're like 2 pounds, and you just lift them up and they're like air, they're super light. Maybe they're, you know, 5-pound weights, but you're like, oh, this is pretty easy. Well, $100 a month is, you know, if you break it down, that's 25 bucks a week. And you know, I was going out to the movies sometimes with friends or going out to eat, and you'd easily spend $25 during the course of like one night. So the idea for me of putting 25 bucks a week into future me was easy. So I did that for 3 months, and after I'd done 3 months of it, I said, you know what? I think instead of $100, I could up this to $200. So that's what I did. And I just want to show you this real simple. My first investment, this was the name of the fund, Mutual Qualified Fund. It's not called that anymore, but I put $1,000 in, and every month I put $100 in for 3 months. And after that, I upped it to $200 each month. And now I just want to say, there may be a tendency to think, oh, this is probably a good mutual fund because, you know, whatever, people see me talking about it and think this was some smart move. Well, you know, it was the best that I could find at the time, but I don't think it's an excellent mutual fund. And in fact, I did this for 3 years I put $7,200 into it total. And then after that, I got a better idea for myself for where I wanted to invest, so I stopped adding to that. But here is my message, because I said, you know, I'm going to show you my own experience so that you can learn something. I put in that $7,200 over the course of 3 years, and it grew. I never touched it. I didn't take any money out of it. I didn't add any more. But when I finally needed some money, I had decided I wanted to buy a house. You know, I looked at that total. Now, it had not only grown beyond $10,000, it had grown beyond $20,000. It had grown beyond $30,000. It was a big chunk of money, and it's just because of these small initial investments and then letting time do its thing. And so I was able to just sell those shares, and then I also had some other mutual fund and I think some stock, and then I had some money in the bank, and I just put it all together, and I was able to put a down payment on a house and bought a house in Seattle. And so it was just this simple decision that I made years ago that really helped me. And I just want to tell you, you know, the take-home message here is it wasn't any smart, you know, decision on which stocks to buy after I just found a good mutual fund. And I didn't have to perfectly time the market, you know, I just did it every month, and it worked out really well. So let's go on. As I mentioned, I stopped the mutual qualified fund investments and I started with different funds. But the most useful of all of the funds that I started investing with after that were the Vanguard funds. Especially, I really liked the Vanguard S&P 500. Now, at the time, you know, there were a lot of different mutual funds available, both actively managed and passively managed, but at this time, I started to realize that owning a big, diversified collection of stocks, which is an index fund, at a low cost made sense. So, like I said, I stopped with that mutual qualified fund and I started with the Vanguard S&P 500. Now, I just want to answer a question a few people have had in the comment sections of other videos. Between the S&P 500 or the total stock market index, you know, as far as an ETF, because people are sometimes wondering if they should go with VOO or VTI. Not advice here, you know, it's really up to you. But I have just found personally that the returns for both of these ETFs or index funds are really similar, especially if you consider like the top 10 holdings are identical. I find that over time, it's not going to make a big difference whether you're in the S&P 500 or the total stock market. But what I think makes a big difference is whether you invest in an automated way. By automated, I mean the investment comes out of your bank account and goes directly into an index fund, or whether you have to do it every month. Now, you can make the automated investments if you have an index mutual fund, okay? Such as the Vanguard 500 index fund. And that's just something, it's not the ETF, it's just the index fund. That is something where you can make purchases on a recurring basis. You just set it up, so you could do that on a monthly basis. With VTI or any ETF, you can't schedule it to be done automatically because they trade, the prices fluctuate throughout the day. So if you're the kind of person who is going to forget about it or get a little bit scared, then you may want to set up automatic investments. But if you like investing on your own and you feel like you can stick with it through thick and thin, then you know you might as well do it on your own using your brokerage app. So anyways, that's my basic thing is if you have the right mental attitude and you're disciplined, you can do it yourself every month. I don't have any fear. It just doesn't faze me when I see the markets go down. I'm actually happy because I'm going to be able to buy more shares of my ETF or of my index funds when prices are low. So I like that. It works for my temperament. But for a lot of people watching this, I understand that there's a certain amount of fear when you start buying an ETF like VTI or VOO, and then you check your account and you see that it's down $5 or $7 or 10 or 15, and then you start questioning whether you made a mistake. So, you know, this is all about investing temperament. And if it were really easy, then everybody would get rich by investing. But a lot of people let their emotions get the best of them and they kind of freak out, to put it simply. And that's why you need to figure out what you're able to do and whether you're able to even stick with this. If it scares you to see your account balances go down 20% or 30% in a year, you may not be cut out to invest. That just might not be something that you're good at. But if you're able to withstand that temporary pain and keep, you know, a long run perspective that you're going to be doing this for 10 years or 20 years, then investing may just work for you. Now here is something that I think is really cool to share with you, which points toward why stock picking is really hard to do and why an S&P or a total stock market index make a lot of sense. Now take a look at these 5 stocks here: General Electric, Exxon, Pfizer, Cisco, and Citigroup. And tell me if you can think of what those 5 have in common. All right, time's up. I'll tell you what they have in common. These were the 5 largest holdings in the S&P 500 index fund in December 31st of 2000. None of those stocks is in the top 10 today. You know, now we have Apple, we have Microsoft, Amazon, Berkshire Hathaway, all of these companies in the top 10. But back then, nobody knew what would be the best performing companies, which stocks would be the ones to own. Tesla didn't even exist probably in the year 2000. So if you're a stock investor, you have to realize that the stocks that are in the top 5 or top 10 today probably won't be there in another 20 years. Just like 20 years ago, they were totally different. So if you're investing in stocks, you have to realize that you may be having to monitor them and sell them and figure out which are the next stocks. But if you own these ETFs like VOO or VTI, it's done automatically by the company that's running the ETF. So they just replace the holdings automatically and you don't have to worry about it. So I told you I would tell you 3 stories. So the first was about making that first investment and how well it worked out just investing every month. Now we are in the red zone. And so there had to be a better way to invest than having to try to pick the best stocks. Because as we've already established, in 20 years, Apple, Amazon, Microsoft, Tesla, they may not even be in the top 10 spots. So investing in an index fund or an index fund ETF makes a lot of sense. So what I'm going to talk about here is VTI, because some of you have watched my videos previously and have asked me some questions, mainly wanting to know if I would do a portfolio reveal or, show what I own. And, I was really hesitant to do any kind of portfolio reveal because that's the kind of thing I hate about other YouTubers when they show you what they have in their portfolio and kind of brag about how well or how hot their stocks are or whatever. And I really didn't want to do that. And I don't want to do it. I think it's kind of subconsciously promising to the people who are following their channels that if they do this thing, then they will get these results. And there's nothing further from the truth. Everybody's experience is going to be different and the future is totally unknown, especially in the short term. So I really didn't want to be someone to say, hey everybody, look at my portfolio. But I asked a few of you, what did you want to see? And I thought the answers were really like, I liked them. And I liked them because people said something like, I just remember one of them, I started investing in VTI already, but the markets have been going down and now I'm starting to question whether this was a good idea. So I just like to sort of see that you're doing this too. And I thought, you know what? That's fair because here I am making videos, introducing people, helping them understand ETFs, and people are saying like, well, do you have skin in the game? Are you doing this also? I could make a video and just show you that I'm actually investing each month. And you can even see, what I paid to buy my ETF shares, and that's not like a big deal. So I thought, good question, and I want to be someone who pays attention to the comments and relates with you guys. So let me tell you, VTI, Vanguard Total Stock Market ETF. Some people have, people out there often talk about where's the market going. And the point I wanted to make is the wrong question is where's the market going? Because nobody can answer that. What I mean by that is nobody knows where the market is going to be next week, or next month, or even next year. Anybody who claims to have some idea about what's happening with the inflation, or the recession, or interest rates, or the stock market is full of it, because nobody knows. People like to pretend to know. People get paid on, financial news networks and TV shows and everything to pretend to know where things are going, but I don't think anybody knows. I think there are 3 possibilities. You can tell me if I'm wrong, but I think either the stock market will go up, the stock market will go down, or the stock market will go roughly sideways. If there are other options, I don't know what they are, but I think anytime you invest for the short term, that's going to be your outcome. But in the short term, what's the point unless it's entertainment for you? A lot of people go to Vegas and they gamble, they play poker, blackjack, play the slots, and the net result is that people who go to Vegas lose money. But I guess it doesn't keep people from going to Vegas and gambling. So, just keep in your mind this idea of speculating. If you're putting money into any investments and you care about what happens within the next few weeks or months or a year or two, then you're gambling, you're betting. But that's not my scene. So next week, month, year, irrelevant. 10 years, 20 years, 30 years. Now that's my ball game. That's where I play. I have been investing, like I showed you, for quite a while, and just being able to be in the market to make these periodic investment work, it works for me. And you know, whether you're in the Vanguard S&P 500 or the total stock market, or even, you know, one of these other ETFs like SPY, or, you know, some people have accounts with Schwab or with Fidelity, and all of these companies offer pretty much similar products. Sometimes the annual expenses are a little different, or the holdings might be, but in general what I've found is all of these have similar products that they're trying to sell to you, the investor. But I really don't think it makes a big difference as long as your particular fund isn't charging an egregiously high fee or expenses. I think that just investing is going to be much more useful to you in the long run than worrying about exactly which ETF or index fund you invest in. So now, here we are in the red zone, and you know, I just realized Vanguard's colors are red and white, and I just think it's cool that my VTI section here is the red section. It was not planned, but I love how things work like that. You know, I like Vanguard. I think my bias is that I've been an investor for, I can't believe this, but it's been more than 20 years. But their funds seem to be excellent, they're well run, the expenses are low, and so that I just stick with what I know best. But like I said, if you have an index fund that, you know, tracks the market and you like the company that runs it or provides it, then go with it. I just want to show you what I've been doing with VTI. And this is to provide you guys with examples. So what I do is every month now, on the first of the month, if the market's open, I buy about $1,000 worth. Sometimes the shares, you know, I like to buy an even number of shares, so sometimes I might buy slightly less than 1,000 because I'm buying, you know, 5 shares or 4 shares. And sometimes it might be a little bit more. If I have a little extra money in the brokerage, I might pay a little more than 1,000, but that's my goal. And so I will show you what I got. On January 3rd of this year, 2022, I bought 4 shares and they cost $242.65. So as you can see, that came out to just about $1,000. Then February 1st, I bought 5 shares. You can see all the totals here. I'll just run through it. March 1st, I bought 4 shares, and April 1st, I bought 5 shares. As you can see, the prices started pretty high at $242, and by the end of the beginning of April, they were at $227. Then by May, you can see May 2nd, because I think May 1st must have been market was closed. On May 2nd, I bought 5 shares, but look, the price was $208 and change. And then June 1st, the price had gone down to $205. So now I'm buying 5 shares with my 1,000, whereas as you recall, I was only able to buy 4 earlier. Then July 1st, I bought 5 shares at $190, and August they were $205, and then in September it was $197. September 1st, a year ago, this is 2021, a share of VTI, this is where it closed, $233.58. So what you can see is people were really excited about stocks. Everyone was buying stocks a year ago, and the prices for these shares were a lot higher than they are this year. But what I find you know, instructive is that when stocks go on sale, you're able to buy the same shares, only this year they're a lot cheaper. But now people are afraid. Now people are hesitant. People are selling. People are saying, you know what, maybe I'll wait until the economy turns around. Maybe I'll just wait, and then once I see the stock market starting to go up, then I'll buy. But those things are very hard to time, and by the time you figure out, well, all the other investors have figured out. And what my experience is, by the time you've noticed that the stock market started to go up again, it's already gone up like, you know, 5, 10, 20%. So hard to time, almost, I don't like using words like impossible, but very difficult to time the market. So all great things start small. You know, if you think about great companies like Amazon, you know, it started as a company selling books online, and gradually it grew, and now it's just this enormous internet retailer and a tech company with Amazon Web Services, and it's enormous, but at some point it was quite small. And I feel the same will go for you and your investing account. You don't have to think huge when you start. You just need to plant the seeds and continue watering it and giving it some sunshine and not forgetting about it or neglecting it. And over time, the miracle of compound interest and the process, the gradual increase in earnings for all of these companies. So by owning shares in these companies, you'll find that over time, with patience, your account balances will grow too. But it does take time, and these things start small. So let me give you an example of things starting small. Trees. I bought this apricot tree to plant in my front yard after I bought this house. And I bought it from this nursery, and they sent it to me in like a cardboard tube, okay? And it was just a stick with some roots on the bottom. And I mean, no leaves, nothing. And I planted it in the ground. I found a good spot in the front yard, and I dug a hole and I planted it and I watered it. And you know, I waited around for like a year and a half, and it barely grew. I mean, I think there were some leaves on it, but it was pretty much, I was expecting a tree, and I just had this little sapling in my front yard. And I remember calling up the company, the nursery that sold it to me, and I said, hey, you know, what's the story? Can you tell me, maybe, do I need to get another tree as a replacement? What? And they said, oh, you know what? Be patient. Trees take time to acclimate. It might be a while, but it's just growing its roots. And so that was 7 years ago. And now the tree's like 25 feet tall. It's just enormous. I actually had to go out there this summer and just prune it because it's like starting to grow up over the house and stuff. So the story on that is just that, you know, I was looking at it and expecting these quick results in the first year. And the reminder I got from the woman at the nursery is just be patient. These things take time. And I think the same can be true of investing, that you can't expect things to grow overnight. You just have to trust the process. You know, I used to hate flossing. I, you know, wrap it around my fingers, the dental floss, and fit it in between my teeth, and the gaps between my teeth happen to be very tight, so it's really hard to get floss up in between them. And so my fingers would just get really like tight with the floss pulling hard, and it made me hate flossing, but I knew I should do it. So anyway, I wound up, let me see if I can show you what I got. My uncle, who's a dentist, suggested these right here, little plackers. And these are cool little tools. They're just a plastic thing with a little piece of floss in between it. And this made flossing really easy. I just mentioned that because maybe some of you guys aren't yet flossing as much as you want to, or not flossing at all, but these here help. I floss my teeth now, it's no big deal. And to run one of these over my teeth before I go to bed takes me like 2 minutes, maybe 1 or 2 minutes. And it's really easy. I can do it when I'm walking the dog. You just walk around and you clean out between your teeth, and then you just rinse and then go to sleep. But what I found is that's very, very good practice, because like in my family, with my mom and my dad, my sister, like they've had crowns put on their teeth. They've had their gums get so like inflamed with bacteria and junk. They've had to have these deep cleanings, which apparently are really painful, where they go in and clean all the junk out around your gums. And you know, we've had people in my family get root canals. I mean, these things are painful to get done, and they're really expensive. I fortunately have not had to have any of that done, and I attribute it to brushing and flossing. So if you have not had any dental problems yet, you are fortunate, and if you floss, good for you, and if you don't yet floss, you might want to start. By the same token, investing really takes very little time. Those monthly investments can either be automated through your brokerage, or you can just buy some, ETFs or something, or mutual funds, index funds, once a month. And the process now is easier than ever, 2 or 3 minutes. And this all leads to story number 3. So our first one was about me buying the first mutual fund shares I ever bought. And the second was me revealing to you the VTI purchases that I've been doing in 2022. And by the way, I'm not done. We still have October, November, December. And on the first of each of those months, I will be buying my VTI share. So if you guys are wondering whether this YouTuber is sharing your pain, well, I would say I am sharing this experience, but it is not painful. But now we are going to go to the next story, which is the green story, the third section of our story time today. Ooh, I like this. This is minty green. Pretty cool, huh? Okay, so story number 3. I was just talking to a friend on the phone day before yesterday, and I will call her Jenny. That is not her real name, but we're gonna go with Jenny because this story is awesome, and I think it will be instructive for you, the viewer, who has not yet invested, or maybe just starting, but maybe you're at that point where you're thinking about investing and you're still about to dip your toes in the waters of investing, because I like this story. So Jenny, she lives in an apartment right now, and she wants to move into, she wants to buy a condo or a house. And she's really, really frustrated with her apartment because like she's told me she can hear her neighbors snoring. And I said, that was the best thing about buying a house, is I don't have people on the other side of any of my walls. I don't hear people's day-to-day movements. I don't hear their music, and I can blast my music as loud as I want and nobody else hears it. It's awesome having your own house. And she's struggling because she doesn't have the money to make that down payment. And in fact, she's never invested in her life. Now, she's in her 30s. I think she's about 36. And, this is just one of those things. She maybe has been doing other things with her life, never thought of it. I don't know, and it doesn't matter, right? We all have different things that we do during our lifetime. But if in her 20s, let's just say, for example, at 21 years old, if she had made that decision to just start investing, say, $200 a month, she could have, by the time 15 years have passed, have a nice chunk of money so that buying a house would not be the obstacle that it is today. So what I want to point out is she wants to buy a house or a condo. It's too expensive. So she may have to be really far away from Seattle because real estate in this city is really expensive. So she may have to drive out 45 minutes, maybe an hour or more to buy something that's cheap enough. But that effectively separates her from maybe in the future, getting into Seattle or having a job in Seattle, because the commute is going to be pretty far. So she's in her 30s, never has invested. And the truth is that this house thing may never happen, or it may happen differently, but she mentioned to me that she's going to be moving back in with her family, at least for a few months, while she tries to figure this out. But I want to show you an investment scenario. If we go back to her 20s, okay, 21 years old, that was back in 2007. If at 21 years old, she had saved $1,000, which I believe is within the realm of what's possible for at least a lot of us who live in the US. Most people who have a job or get a job are able to at least make $1,000 sometime within the course of a month or two, or save it up maybe over 3 or 4 months. But if you were to start with $1,000 and put in $200 a month, okay? That's 50 bucks each week, which most of us can save. In 15 years, that turns into more than $116,000. If instead of starting with 1,000, you only had 200 bucks, maybe you didn't save up that big $1,000 chunk. If you start with 200 and you put in $200 a month, the total is $113,000. I mean, it's not that much less considering you're starting with a much smaller amount. And if you were brave, and if you were courageous, and if somehow you were able to save a lot of the money that you earned at your job and put in $10,000 to start just on day one, and then every month after that you put in 200 bucks. After 15 years, that would be worth $150,000. Think about that. That's an incredible amount of money, and the monthly on that is just $200. Now, you know, human nature, it's hard to postpone enjoying something now, to delay your gratification so that you could buy something or do something in 10 or 15 years. It's just, I think, not something that's built into our DNA, into how we live and think. At some point when I was in my 20s, I just realized, because I'm a photographer and because I don't have one company, like I don't have a boss or an employer, I run my own business as an entrepreneur, and I just figured out early on that nobody was going to give me a 401k plan or what do you call it, a pension. So anything I was going to have later, I had to save on my own and invest. So I'm just pointing this out. These are not small amounts of money. These are huge chunks of money. Any one of those could be the down payment on a nice house anywhere around Seattle. But if you don't start, that doesn't happen. I like this green section. It reminds me of minty, fresh breath. It also reminds me of mint chip ice cream, which happens to be one of my favorites. Just one other thing I want to show you about this. I was showing you these dollar totals here going from 2007 until 2022. 2007 was the year before the financial crisis, when the stock market crashed somewhere between, I think, 30 and 40%, the S&P 500. So these fantastic results were for someone who started in 2007 at, you know, the worst possible time, right? Because the markets were about to crash. But the nice thing about this process is, you know, in the first year, you're not going all in with your whole investment. You're just putting in a little bit each month. So even starting right before a market crash, you still get a great result. Now, if they had waited another year or two, sure, maybe their result would have been a little bit better, but it wouldn't have been a lot different. So anyways, market timing is not essential. In fact, you don't need perfect timing. What you do need a long-term mindset. You need to be able to invest for the long run. You need to be able to imagine today in 2022 that you're going to put some money away for 2032 or 2037, even though 15 years seems like it will never be here. But it will be one day. And if you are young, you've got a long time horizon. 15 years is nothing. 15 years like that. 15 years could turn your money into 100,000 or 116 or 150. So, but if you focus too much on today and you don't start, you'll never get there. You do need to invest in a diversified fund for the long haul. I wouldn't go with anything personally that's too niche. You know, like people invest in, commodities in, ETFs like oil, or they go for, renewable energy ETF, or they choose something like investing in emerging markets or international. Those are all appropriate in certain circumstances, but I think going too niche, small cap or all mid cap, or it can get you into trouble if one of these niche areas winds up crashing and not coming back. But I believe that going for things like total stock market or S&P 500 do make a lot of sense. You do need a thick skin. Take a look. You know what we're talking about here? Yeah, you can see that. There we go. You know what these two things have in common? The hippo and the rhino? They're both pachyderms. And I just looked this up because I thought I knew what pachyderm meant. Pachy, Greek word, thick. Derm, skin, thick skin. These two girls or guys, I don't know what they are, but these two dudes and dudettes have thick skin, and you need thick skin to invest for the long term. What does that mean? It means you need to stay calm and not care about what the market's doing. Having that state of equanimity in kind of going about your life and doing other things, investing just like you're flossing your teeth or like you're planting a tree. You give it some water, you give it some sunshine, give it some fresh air, and you don't worry about it, because really you have no control over the stock market. And the sooner you can realize that you have no control over it, but what you can control is your behavior, then you will be able to start investing and have the thick skin of these lovely pachyderms. Even though the market might be going up or down or sideways, it won't matter. Just put one foot in front of the other. So finally, I know I've said numerous times that I do not give advice, mostly because I haven't the foggiest idea where the market's going, and I would never tell other people or even suggest what they should do, because I don't know your particular situation, and I think the best thing I can do is just help educate you so you understand the investing process better. What I do, I guess the first two are what I don't, but don't listen to hype, okay? I tune that out. I listen to it, but I smile, I laugh. Don't gamble on stocks. You know, again, you can go to Vegas, you can play the slots or pay 21, but you're not, that's not investing. So don't gamble on stocks. I do take walks with friends and dogs, and I eat nutritious foods, and I also floss every night, and I invest every month. I know it sounds simple, but it works. So I hope this has been useful to you guys. I really do. I hope this has been useful because it's at least shown you some real concrete examples of what I do. So there you have it. I shared with you the 3 stories. And I hope this has been useful and instructive to you guys. I don't think I've ever shown anyone that first brokerage statement from the mutual fund company that showed the purchase of my first shares way back when I started. But I hope you can see that just like planting a tree, investing just started with one simple step. And then I showed you my VTI investments over the last 9 months. So you can at least get an example and an idea of what it looks like, and how I bought some shares, and how I just continue to do this at regular intervals. I think the important thing is just to continue on through thick and thin, and especially through thin. Thin being when other people are scared and when the market's down, because that's when you get your lowest prices, the most attractive prices for these ETF investments. So you just want to make sure that you're investing when things are cheap as well as when things are more expensive. And finally, the story about the friend who wants to buy a condo or a house but is kind of stuck now because, as she's finding out, it's expensive to buy, and it's even harder when you don't have a chunk to invest in that house as your down payment. But for those of you who are young, who have not yet needed to buy something substantial, now's the time to start saving and investing your money so that 10 years, 15 years, 20 years down the line, you'll have that available to you, either, just as a safety net, as a nice reserve in case something happens so you're prepared, or to make a purchase in something like, a house, or maybe to start your own business, or whatever it is where you're going to need some money. This way you can depend on yourself rather than having to look to other people to help you out. So I'm real glad that you watched this video. Thanks to all of you who put the comments before, who asked me to provide some of this info. And if you like this video, it means a lot to get the thumbs ups. It just tells other people in the YouTube world that this is a video you found useful. So I'm real glad you're here. If you haven't yet subscribed, please subscribe to the channel, and then you will get a heads up when I make more videos like this. So glad you watched, and I look forward to seeing you in the next video.